Crystal clear? Absolutely. So we did a little class on this morning, had a chat about it, so that you could properly understand exactly why this happened, exactly what the trade was, and why we were so accurate in our call. Why we were so accurate in our call. As I said, you couldn't actually make it up, it was that accurate. We even gave you the exact price that it needed to break to make the gammas go positive. 422. Never broke it, never went positive. For that reason, life was easy. Easy to make money. Now, obviously, the idea of the rotations helped us out massively because we were able to be very, very bullish into the close. It carried on through into the technical restart when we opened gap up after the electronic restart at 11 o'clock last night, London. And we simply just kept buying and buying and buying and buying and buying and buying, and we made a massive profit on the upswing away from those prices. This morning, it's been a bit average. There's been a bit of buying and a bit of selling coming in right through this morning's session. You can see we obviously broke the big 42 handle. And again, just the idea of paying attention to the key reference levels, very, very important. And you can see that once we've broken that 42 key handle, you can see from the London session, buyers came in at the 42, buyers came in at the 42, buyers came in at the 42, and then it swept through, and then sellers jammed the price there and took the price down. And from that point onwards, we went back on bid watch at the lows as we tweeted, and we've had a very nice buy side response to the bid watch as well. So fantastic trading. We had an unbelievable day yesterday, very, very successful, massive profits, and it was all called in advance. We told you all about it. We even did classrooms on it. So there's no excuses for not being able to take part in the trades that I shouted out for you guys. All you had to do was pay attention to that 422 key strike, and I must have mentioned it a dozen times yesterday, a dozen times. And if you didn't pay attention to 422, you simply were lost. You weren't seeing what the key strikes were doing for us. It's a very, very important point because there's obviously the subtlety in the story. And we chatted about it this morning, and we did a little classroom on it this morning about this idea of the rotational business, the idea of the looking at the rotational money, which simply just didn't use their cash to buy into any stocks until we got into the closing bell. And then at that stage, of course, the market went straight up. As soon as that happened, the market went straight up. Now, the afternoon session, pretty much from the cash market open, was very, very neutral, actually. If you actually stop a second and think about what we saw after they closed off all their puts, what does the market look like, guys? After they closed off all the puts, is the market bullish or bearish? What do you think? This is yesterday's market, guys. After they closed off all those puts, was the market bullish or bearish? Neutral, wasn't it? Completely, you couldn't get a more neutral market than that, could you? The market just went completely sideways, literally from 1500 hours to 2000 hours, the market went completely sideways. So for 5 hours, the market never moved after all of those massive gamma puts came in pouring into the markets. Why is that? Because people were using some cash to buy some cheap equities, just like I explained. And every time the price went down, the buyers came in, and the price went down, the buyers came in, and the price went down, the buyers came in. But what they weren't doing was they weren't buying at higher prices. Understand? Comprende? Makes sense? Perfect sense, right? So when the market finally did break, and there was a reason for that, and we'll touch on that again into the classroom, the market just sold off after the market broke that 419 key level, the level that they'd been previously buying. And obviously then it was just a case of waiting until the close, watching how it was developing into the close, and then we were big buyers of equities through the closing bell, through into the technical restart, the electronic restart. An amazing, amazing day, fantastic narratives, and a very, very strong case to understand these elements, because yesterday was a great example of exactly what it is we teach here. Great example. It was perfection. Talking of perfection, how good was the gold this morning in terms of our stories? We did a classroom on gold this morning where we highlighted perfection. And interestingly enough, we highlighted perfection based on a very, very simple story. It's called Spikes in Volume, a story of commercial activity. We talked about this spike, this spike, this spike, these two spikes, and this spike. We talked about every single one of those spikes, and then we looked at it on a value chart. A buy trade made money. A buy trade made money. A sell trade made money. These two trades, well, we talk about those, profit taking. This buy trade made money. And I asked the question, well, if I can make $2,500 on a 3-lot on gold over a 1-hour period simply by using one value line and one volume line, why the hell can't you? It was a big question. I didn't get any answers to the question because it's a question for you individually to answer as a standalone trader, but it was an incredibly insightful little informational journey we went on. The insight we got from the big boys taking trades and then asking a very, very simple question, why did they take that trade? And from that decision, we were able to make a decision ourselves about whether to buy or sell into the marketplace. When I trade the horses, when I trade in the gambling world, the sports world, I look for the big boys, the big impactors, the William Hills, the Bet365s, the two biggest players in the British horse racing industry. And I watch to see every single move they make. In fact, we've got algorithms that chart exactly what these guys do. And from those algorithms, we make decisions about insider activity. If we don't know about it ourselves, then we're obviously able to follow it by following William Hills and Bet365. And from those decisions, we consistently make money on the horses. Sounds like it should be pretty straightforward. Well, when you think about it, it's almost exactly the same as following the money. This old story about follow the money. Every floor trader in the world knows about following the money because that's exactly what every floor trader does. They follow the money. They follow the commercials. The commercial comes in and bids. The floor trader bids behind them or in front of them. The floor trader, the big commercial sells and they sell crossing the spreads. The floor trader sells. One tick in front, one tick behind. The floor trader follows the money. Well, what do you think this trade is here? It's following the money. It's following the actual money, isn't it? So if the success in any field, unless you have inside information for yourself, if you're the horse owner or the horse trainer or the syndicate owner, unless you have inside information for yourself, you only have one choice, and that is to follow the money of the people that are insiders. This is evidence of insiders, just the same way as the option market is evidence of the insiders. That massive unwind of options yesterday was evidence that we could use to say, right, what are they going to do with the cash? What are they going to do with it? Going to do something. We'll cover this in classroom again this afternoon. It's such an important point. When they close off their puts and they close off their calls, they have massive amounts of cash, but what are they doing with it? Not what are they about to do with it, because we're not trying to forecast what they're going to do. All we're doing is we're going to wait to see what they actually physically do with the money. It's not that difficult to understand, guys. So when I see this incredibly large surge in volume, I'm not predicting that it's there. I'm simply observing that it's there. Simply observing. So when I see that huge pop in volume right there, I know that somebody large just bought a big chunk of gold. Some major gold player just bought gold. Did they buy it to close off a short position? Or did they buy it to go long? That's the only decision I need to figure out, right? And when I look at the charts and I look at the value charts and the value is going straight up, the real yields are falling, the bond price is ripped higher, and I'm getting a low gold price, I now know the answer to the question. They're buying gold to get long. So if they're buying gold to get long, what is my decision? Oh, guess what, guys? I'm going to buy gold to get bloody well long. It's not that difficult. It's what the floor's always done. You pop in a trade and it goes from 90.5 to a high swing of 94s. You make yourself $250, $350 sometimes, and then it pulls back and you get a scratch and you buy it again. And this time it goes from 90.5 to 97s, $650. In these two buy trades, you've just done $1,000 maximum swing profits. 3 contracts in those areas, easily $1,000 from your maximum swing profits. 3 contracts, by the way, it's always the standard rule of thumb, is that if the maximum swing is $1,000, if you trade 3 contracts, you should be able to do that maximum swing on a 1 lot. The reason why it's a rule of thumb is because everybody talks about the middle third. So long as you get the middle third, the middle third, the middle third, you'll be successful. So if you trade 3 contracts for the middle third, you make the whole, don't you? You make 1.0. So if the maximum swing's $1,000 on a 3 lot, you should be able to make $1,000. If you don't, you're not trading efficiently from a maximum swing perspective. Does that make sense to everybody? You've probably heard the middle third conversation by many technical guys in the past. So long as you catch the middle third, you'll make money. Well, we don't try and catch the middle third unless you're, of course, the momentum trader. Unless you're the momentum trader, you try and catch the middle third, don't you? You try and catch the first third out to the, preferably the last third, but sometimes the second third. And that gives you your money. That gives you your money every time. So we can understand this, guys. This is good. It's absolutely critical. It's not something that's nice to know. It's something that is essential to know. Absolutely essential. And as I said yesterday, we called it live in the room for you. We'll go back over it again. We said that we would cover the market making on the NASDAQ or the S&P, whatever you want to do yourself. You can obviously set up the charts. We'll cover that this morning, this afternoon in classroom. And we'll get going. We'll get our sleeves rolled up and we'll kick on. As far as this afternoon in terms of data, not an awful lot, pending home sales from the US at 3 o'clock, trades balance numbers coming out at 1:30, and crude oil inventories at the usual slot of 3:30, of course. And then we've got Lagarde coming out at 5 o'clock, which isn't really going to affect an awful lot. We do have a 5-year, for the bond traders, we do have a 5-year auction today on Treasuries, a 5-year auction. So something to watch at 6 o'clock for those short term. Remember, we talked about BlackRock's mention of they're only interested in short durational bonds. So 2s and 5s would be the short durational bonds that they're specifically talking about, 2-year bonds and 5-year notes. So obviously we want to pay attention to that demand. Yesterday we saw very strong demand for the 2-year in the auction. We tweeted out the 2-year auction results. Very powerful. And obviously the bond price had a bit of an upside pop on it, but not by much. But obviously it's something you're aware of, a very strong auction yesterday for 2-year treasuries. 2-year treasuries, very strong. Anyway, I'll welcome in. If you didn't see the results yesterday, it is in the tweets. But again, we can quickly go through it so that if you're getting ready for tonight's 5-year auction, then it's something that you want to make sure you remember about. You can see that the US sold $48 billion of 2-year notes with a stop through of 1.1, which means a tail of minus 1.1. A high yield of 2.585%. The prior was 2.365, so we've gone up. In the last month, we've gone up, basically, you can see we've gone up by around about 20 basis points. The when issued was at 2.596. The tail was minus 1.1, which is the stop through of 1.1. The bid to cover was 2.7 times. The prior was 2.4, and the 6 auction average was 2.6, so a stronger bid to cover. The dealer's takedown was 12.6%. The prior was 19.4, and the 6 auction average, guys, 23%. So the dealers got next to nothing on their underwriting part of their auction, right? Next to nothing in comparison to previous auctions, which means there was a big take-up. Where is that big take-up? We look at the indirects, which is a proxy for the sovereigns, the big international sovereigns, and we can see that the 6 auction average of 58%, the indirects took 66%. A massive demand from the the big sovereigns, the big international sovereigns, massive demand for US Treasuries from the big international sovereigns. And that is a very strong two-year bond auction, very strong. And obviously that demand, well, when we look at the bond market, when we look at the demand that showed up on that auction, and then we look at what's happened to the bond auction since then, we can start to try and figure out a little bit more about the storyline. You can see that at 1800 hours, that's where the demand came in. So obviously anytime we get lower prices, you'd imagine we'd start to see some real money buying opportunities, and that kind of happened, didn't it? We got some buyers at lower prices into the US late session, and we got a very strong rally into the close. And from that low price, you can see that the bond price has not traded any lower than yesterday's US lows. Is that useful information, Reeve? Is that useful information, Rennie? What do you think, guys? Useful to know where the yesterday's low is with that hugely successful bond auction? Damn right it is. Damn right it is. So we want to know where that price is, and that's where we've been able to buy some bonds quite nicely this morning. Make some easy money, right? Make some easy money. With the demand on the twos, we would imagine that any time the bond price goes below here, we're going to see people buying up some fives. Because obviously that's an idea that if we got that amount of demand for twos, we would expect to see similar demand for fives if we're getting lower prices. Oh, unbelievable. If we're getting lower prices. You couldn't really make it up, but again, isn't this important? It's the devil in the detail. It's that taking your analysis simply from seeing an auction to monetizing that information the way we did yesterday on equities. Being able to monetize the information that we know is a whole world of different from simply knowing the information. Turning it into reality, turning it into trades, turning it into cash is where the art is, isn't it? And that's obviously what's personal to you as a trader, as an analyst. You might know all this stuff, you still didn't turn it into cash. I hope you guys did turn it. I hope Rennie and Reeve and anybody else that's been trading treasuries with us, I hope you guys did turn this information into cash. But if you didn't, hopefully you've at least learned something new. Hopefully you've seen what we're seeing and you've understood the concept and you've been able to chart it out. And if you haven't, you've learned that in future that that's what you're going to do. In future, that's what you're going to do, and you're going to start working the ideas from that logic. And you can see a very, very strong trade narrative. We went 27s. We did over $1,000 on that trade there. And this trade here was $1,000, and this trade here was just under $1,000. That's a lot of money on bonds this morning. A lot of money. Well, there was a few sellable opportunities as well, of course, but we're really just focused on that buy trade because of the auction storyline. Again, guys, remembering stuff seems to be the challenge for the vast majority of you. It's not about learning it, because you all learn it. You're all in the classrooms. You're all understanding what it is we're talking about. But remembering that understanding and applying that understanding to monetize it into real money cash, like yesterday's options conversation. We told you what needed to happen for the market to go up. The 22 had to go bid. It didn't, so the market went down. It's no more complicated than that, guys. Literally, it's no more complicated than that. So when we think about these things, we simply can start applying what we learn to the marketplace. By applying what we learn to the marketplace, like the gold trades that we talked about this morning in terms of those surges, which we'll obviously cover again in class, and we'll make sure you guys are clear about what it is we're talking about. We can simply find some crazy, crazy good trade opportunities. And as I said, monetize it, which is exactly what we're trying to do every time we step into the markets, is just monetize the simple stuff. Anyway, welcome in, guys. Hope you're all good. As I said, not an awful lot to get too involved in at the start. As I said, data-wise, 3 o'clock, goods, trades, balance numbers at 1:30. Not exactly earth-shattering stuff in 3 minutes' time, but yeah, we're not really that excited or paying too much attention to that information. But what I did want to touch on, of course, was the macro picture that we got on the SPY before today's cash open. So we'll do that after lunch. before today's cash open so that we can talk about it, so that if we see it again setting up, we can obviously make sure that we're ready to deal this time. And obviously in the classroom, we said we would do a little bit of practice being a market maker on the floor of the NASDAQ or on the floor of the S&P, your choice. It's up to you. It doesn't make any difference really, but it's just something to practice with on a demo account in the classroom today. And we'll be using a very fast chart, and we'll be using the tick narrative and the prem narrative that we did yesterday as part of today's classroom. Not all of it, but as part of today's classroom. We'll go back over those ideas of program trades and the ideas of key strikes and structures, and that's what we'll be covering in today's classroom. Trying to get the simple stuff right still seems to be the biggest challenge. Anyway, welcome guys. Hope you're good. We're all good this morning, ready to rock and roll. We had a nice little sell on oil, actually. I was quite surprised we did quite so well with it, to be perfectly honest. I think this was a call in the room we actually made, but we started to see some supply coming in anyway. I'm sure you guys were on board, but we got a banker trade here. So we started to see some supply coming in here into these upticks, and then we started to see some into the low price. You see a very, very significant series of banker trades starting to show up here. There was a banker sell there, a banker sell there, and yes, there was a banker sell just in there as well, and that gave us a lot, because you can see what's happening to the euro. We're getting some real dollar support for the sell trade, aren't we? Real dollar support for the sell trade. So I love that sell trade a lot. And obviously selling into those areas, 102.20s, 102.20s, 102.10s. We just traded a low price of $101,100. Did anybody play? Did anybody? Tim, Cliff, who was on my oil trade sell side? Who was on the oil trade sell side, guys, down to 101s? That is beautiful. That is beautiful trades. And with the dollar moving so perfectly in line with this, this gives us the perfect structures, perfect price. We just never got the big sell volumes. We never got the big takeout of highs. Nobody traded that. Oh, Tim did. Good. At least we've got one person that pays attention. That's always a bonus. All right, guys. Beautiful trades. I'm going to grab some lunch, and I'll be back in 5-10 minutes.